Hello and welcome to Business Morning. It's another trading day right here in Lagos, Nigeria, and definitely we're going to be giving you the stories you should be, looking at right now before you make that trade now. But let's kick off with what's playing out, what played out in the market yesterday. We see Nigeria's exchange opened the week on a positive note as investors recorded a gain of about 611 billion naira, driven largely by price appreciation in industrial stocks, particularly Boer Cement, and renewed investor interest in select mid-cap equities at the close of Monday's trading. The market capitalization that rose about to 95.2 trillion. There you have it. The equity cap 95.17, and all share index smack on 149,940, just about 50 something points more to get to that 150,000 level. We'll see if that hits sometime, maybe today at this point. Let's look at the trading activity yesterday. It was all in the green compared to Friday's trade. 415 million stocks that was traded, valued at 27 billion naira. Deals 31,522 deals there. If we look at some of these sectors that we track now, we see banking that was in the green yesterday. That's for the sectoral performance. Then we see the top gainers there. Not looking bad there, right there in the market yesterday. We'll see if that continues today. But let's check out some earnings now. It's earnings season. We see listed hospitality company Transcorp Hotel PLC reported a strong performance with double-digit growth across key financial metrics. It's unaudited third quarter results, and that's at September. Key highlights of the report released on the Nigerian exchange's website. It shows that the company's revenue grew by about 49% year-on-year to 72.31 billion naira. This was primarily driven by its flagship property, Transcorp Hilton Abuja, which saw strong growth in room occupancy, food and beverage sales, and event hosting there. At the same time, its pre-tax profit rose about 36%, while after-tax profits surged by about 45% there. So quite an interesting earnings there. I'll definitely be checking out other companies. The company says its gross profit margin also soared by about 76% on the back of improved operational efficiency and superior service delivery. So definitely investors will be looking out for most of these earnings coming out right there on the exchange. So other news now. Nigeria and China have taken a major step towards deepening economic and development cooperation with the launch of the first ever Nigeria-China Women's Infrastructure Investment Forum in Beijing. The landmark event, hosted by Minister of Women Affairs, Imam Sulaiman Ibrahim, aims to promote gender-responsive infrastructure, women's economic empowerment, and inclusive growth. They'll see in food now, the federal government is seeking stronger collaboration with the Food and Agriculture Organization of the United Nations to boost agricultural productivity and enhance food security in Nigeria. Minister of Agriculture and Food Security, Senator Abubakar Kyari, made this known during a bilateral meeting with FAO Director General Dr. Kudonkyu on the sidelines of the 2025 World Food Forum in Rome. The talks focus on expanding irrigation systems, advancing mechanization, and developing a national farmers database to support policy planning and sustainable growth in the agricultural sector. Stakeholders from government, industry, and academia have gathered in Abuja for the 2025 SciBase Annual Conference, a convergence aimed at strengthening collaborative ecosystems for sustainable innovation and economic growth. The conference, which brings together top policymakers, industrialists, researchers, and students, seeks to find homegrown solutions to Nigeria's pressing challenges in the oil and gas, education, and technology sectors. Take a listen.
The success of any nation depends not only on agile, efficient.
At a time when Nigeria is seeking new pathways to economic recovery, innovation and collaboration have become key drivers of growth. This year's SciBase Annual Conference is setting that agenda, linking industry, government, and academia under the theme Strengthening Collaborative Ecosystems for Sustainable Innovation and Economic Growth. Speakers at the opening session emphasized the need for a stronger national innovation system that aligns education and research with real industry needs, particularly in the oil and gas sector, where local content and digital transformation are redefining competitiveness. General Manager, Nigeria Content Development and Monitoring Board, Dr. Abdulmalik Halilu, highlights how NCDMB is deepening collaboration between government, academia, and industries to localize technology and build human capacity.
When we were developing the local content implementation strategy, we realized that there's a nexus between gross domestic production and research. And the essence of local content is produced locally for the Nigerian local content, Nigerian market.
The Chief Executive Officer, Cypher Crescent Limited, Thank God Egbe, notes that data-driven solutions can transform Nigeria's oil and gas operations.
So if we're able to get our data democratized and get processes put in place, we'll be able to achieve that. So technology is the foundation of what we want to look at.
From the academia perspective, Professor Eukaria Nwaichi stressed that the triple helix model, linking universities, industry, and government, remains the fastest route to bridging the gap between research and commercialization.
So they can do this, they can do the acceleration by first fostering co-creation. Because in this model, we have the academia, industry, government, investors, and even community in the fourth leg.
On the continental front, Dr. Rose Orondre of the African Institute for Development Policy emphasized that science communication and evidence-based policy making are essential for building Africa's innovation ecosystem.
Whatever is coming out of research, out of laboratories, out of innovation programs is communicated in a way that people understand, those will benefit from it, but also governments understand, and importantly, they integrate it.
As Nigeria continues to navigate its path towards sustainable development, conferences like these highlight the power of collaboration between research and industry.
All right, let's get a quick check now. What's playing out with oil prices? A decline for the second day today. Fell by about 30 cents, about 0.49%. That's for Brent, $60.71 a barrel. And definitely WTI, that's trading sub 60 at this point. On the flip side, just up about 9 basis points. And definitely we know there's supposed to be that nexus between, or a relationship between global oil prices and what plays out with fuel prices. To help us unpack what's happening right there in the market, we have Dumebi Oluwole now joining us right here. The studio. Great to have you.
Thank you. Great to be here, Laji.
Yeah, so I guess good news, oil prices coming down right there in the global market.
Yeah.
Bad news for government revenue. Supposed to be good news for fuel prices, but fuel prices are still elevated. What's the disconnect here?
I think let's start off by unpacking the trend in global oil prices and how quickly this downward trend we're seeing will translate to the Nigerian market. So the numbers that we're seeing right now, oil prices, at least Brent crude is still over $60 a barrel, right?
Yeah, still by a thread at this point.
Exactly. But I remember the last time I came, I did say that there's a likelihood of it dropping below $60 per barrel.
Right.
And we're clearly seeing that trend happening. What we know is triggering this is weak global demand and oversupply concerns. The markets are definitely pricing in OPEC countries increasing supply, and especially Saudi Arabia. And we've even seen Nigeria also, increasing its supply, and how that is, definitely impacting the global oil market. And the tensions between the US and China also was seeing that, move the market a little bit, and sanctions on Russian oil. Now, the disconnect that you mentioned is the lag between when this happened and when it's definitely going to take effect in the Nigerian market. Remember, commodities like crude oil are bought in forward contracts, right? So what that means is that this price we're seeing today is the spot price, not the price at which crude oil was bought earlier in the year or even earlier in the month, right? And what we are using today was crude oil that was bought some 2 weeks, 3 weeks, almost months, ago, when oil prices were above $60 per barrel. So we also know that there is a time lag for when this happens and when that translates to lower fuel prices in Nigeria. And typically right now that is about 2 weeks to a month. So meaning that this decline that we're seeing, it will take some time, but relatively between 2 weeks to a month.
But before December.
But before December, we most likely might see that. And a very good pointer as to how quickly or how slowly this decline in global oil prices we're seeing would translate to lower fuel price in Nigeria was when Dangote Refinery actually started off earlier in the year, where we saw that decline in petrol prices and how, it took about 2 weeks from when the decline in global oil prices happened and when, obviously the refining and then when prices, eventually fell in the domestic commodities market.
All right, and definitely this has an impact for inflation numbers we're supposed to see for this current month that we'll see next month.
Yes.
So we might see an uptick since fuel prices are higher this month. Yes,
I mean, two things, right? The inflation numbers that we're going to see are inflation numbers for October, right? And when the NBS actually does the survey, that survey happens in the first 2 to 3 weeks of the month. So what that means is that the stable prices we saw at the beginning of October will most likely be what's reflected in the inflation numbers. So most likely, and that most likely will overshadow the uptick we're seeing, the uptick in fuel prices that we are seeing towards middle of the month, getting to the end of the month. But to be very honest, we're seeing 920 right now.
Right.
So what that means is this is just October 20, right? It might have an impact maybe on the month-on-month inflation numbers, right? But not the headline. And month-on-month inflation numbers, because again, like I said, first 2 to 3 weeks of the month. So this uptick that we're seeing right now might reflect. But if we're going to see any uptick in headline, if we're going to see any uptick in the inflation numbers, it will be on the month-on-month inflation numbers. So that's one thing to actually note, because month-on-month is more of what we're seeing as of the price differences between last month in September and October. But on the headline level, inflationary pressures are still most likely to remain low, especially because of the rebasing. Remember, at the end of as of October last year, inflation was still high, right? Still around 30%, over 30%. So that means that the base effect is very high, and of course, that's going to net it off going into October 2025 this year.
Right. All right. Well, we're seeing movement with cocoa futures.
Yes.
At about $5,882 per metric ton. That's down by 0.24%.
Yes.
What's driving sentiment right there?
I mean, same, almost the same as crude oil prices. Right now, we're seeing West African producers, an increase in production from Ivory Coast, from Ghana, even to some extent from Nigeria. And this has been largely due to unfavorable weather conditions. The rains are falling. The cocoa pod diseases are beginning to reduce, especially in Ivory Coast, because that has been a significant driver as to the decline in supply and even exports. But we're seeing situations around that reduce, and that's supporting sentiments around the cocoa, supporting market prices. However, because cocoa is a significant export commodity for Nigeria, this low prices, of course, means a decline in export earnings from here for the country. And of course, it definitely spotlights the intricate need for value addition in this sector. So we have seen an increase in like cocoa butter exports, but of course, more can be done here. Right.
So it almost seems at this point, seeing that oil is on the downtrend,
yes,
cocoa on the downtrend, gold still at record highs.
Yes.
At this point, it almost seems we should be exporting more gold at this point.
I mean, it's not a bad idea at all, especially when
accumulating more gold.
Of course. So I think either way it works. If you're exporting more or you're accumulating more.
Right.
If you're accumulating more, like what we have seen with Ghana, will most likely be the case for Nigeria's exchange rate and inflation story. Even with Egypt as well, we're seeing, as a matter of fact, Egypt, South Africa, Ghana, top African markets like Nigeria, peer countries for Nigeria, we've seen them significantly increase their gold reserves accumulation. Ghana actually, on a year-on-year basis, their gold reserves have actually increased by 130%. So what that tells us is there's a lot of buffer, and especially because of the uncertainty around the global environment, which global economists and even economists like myself believe would still linger, at least for the medium term, 2026, 2027, what that tells us is that the appetite for safe haven assets will still remain strong, and so gold prices are likely to still remain very strong. Goldman Sachs actually predicts that gold prices are going to remain over $4,000 dollars per ounce heading into 2026.
Right, and I'm sure some investors will be wondering where the top is, for gold, or maybe
Yes.
when there's some kind of certainty,
Yes.
that might
Yes.
actually point to the top,
Yes.
for gold. We'll
Yes.
definitely be watching out for that. Thanks so much,
Thank you.
Dumebi Oluwole there, so giving us the details of what's playing out with most of his markets. Thank you.
Thank you for having me.
All right, today we have the Informal Economy Report 2025, a vital, timely resource providing a granular, data-driven understanding of Nigeria's informal sector, the true engine of the nation's economy. The collaboration between MoneyPoint, the Federal Ministry of Industry, Trade and Investment, and SMEDN, that's quite commendable as it offers the quantifiable context needed to transition from general observations to targeted, impactful policy. The report successfully highlights the sector's immense economic contribution, that's about 65% of GDP, juxtaposed with its stark financial fragility, 79% cost increase, and 42% unable to survive a month without income there. That's talking about those in that informal economy. Well, joining us to unpack this now, we have Bemio Awala as the head media and public relations at MoneyPoint. Joining me right here in the studio. It's great to have you. Good morning.
Thank you. Good morning. Good morning to all of you.
Quite an interesting report there, because we keep talking about the informal economy, but we have this general observation about it. Some might see it as something that should be formalized at some point, but walk me through some of the major findings in this report.
All right. Let me backtrack a bit, just so that you properly understand, why we did this. Because, beyond the insights that we provided, I think a fundamental understanding of the why is also very important, Anecdotally, people reference the informal economy as a stigma, as underground. We've heard them use phrases like unseen.
They make it look bad.
Indeed, indeed. But then the epiphany is that this sector actually, as you highlighted in your prefatory comments, that we have it contributes about 65% of GDP, which then tells you that, look, it's no small space. And as Nigeria's leading financial services player that caters to a lot of people in that space, all right? So we saw the insights coming in, and we're like, no, guys, we've got to find a way to help everyone understand, from the media to policy regulators, government, and, everyone. We've got to help people better understand how to serve this hugely important segment. We call them the unseen engine all right, that drives the wheels of economic progress. And so we poured into our data, over 5 million businesses who currently work with us, all right, and then, we then triangulated with a brother, I think about another thousands of businesses, all right? And, we began to ask questions. So it's also important to say that this is our second rodeo. Last year, we launched the first edition. So this year, this is the second edition.
Right.
And with this second edition, we just said to look, what are the behavioral patterns that we have seen in the last 1 year, all right? How can we advise all the stakeholders? What insights can we provide to all the stakeholders in the room that would better empower them to serve these areas, all right? And so we saw that, for example, that 75...
But before you go on,
already,
looking at some of the financial performance pressures there, if you can put that up for me. All right, so we're seeing, there's an issue of rising costs there. About 79% of businesses, they reported higher operating costs driven by, supplier prices, transportation, Naira depreciation, even though we've had a stable Naira.
Correct.
For a while.
Correct.
Now. So, from what I see so far, they go through what every other business,
that's correct,
has to go through the economy. But, break it down for me. You're giving me some.
But there's a bit ossified because of the fact that they do not have the kind of support that structured businesses have. All right, so it becomes a lot more pronounced and nuanced.
They can't just walk in and get a loan.
Absolutely.
Right.
But then, with players like us, all right, that narrative is changing because where structured and traditional financial houses would ask you for all of the routine stuff, we currently apply a credit flow based transactional mechanism to provide working capital loans to these businesses. So we're not asking you for an arm and a leg and your grandmother's toenails. No, we simply look through your financial inflow and outflow, and based on what's coming and what's going out, we can make value judgments using data and analytics to say that if we give this business XYZ amount, in 6 months he's able to replicate it. They are bounding. I'm just going to share a quick story with you. Here in Lagos, 3 years ago, a lady came. Her name is Yaruka. She moved from Abuja after the demolitions and, settled in Igondo area of Lagos. All right. This woman started just like every other person. You've moved to a new city. How do you survive? She began to sell biscuits. She began to sell sugar. She began to sell milk. All right. 2 years ago, one of our relationship managers walked up to her and said, look, hey, we can give you this point of sale terminal for your collection of payments. All right. And she began to use the terminal to collect payments from the mom and pop who also come buy from her. This, I think it was June this year, we visited her on one of our trade visits. I'm happy to tell you that this lady has become a wholesaler today in under 2 years, all right? Today she
from
buys...
retail to wholesale.
Absolutely. In under 2 years.
2 years.
In under 2 years, all right? She has 5x her daily return. So when she started, she was averaging about 70K per day as revenue. Today she does, on a very good day, she'll do conveniently about 700 to 1 million every day. Conveniently, all right. That's the power of access. That's the power of providing, providing credit on the basis of the informality that surrounds you, all right. And so it's to be able, and part of why we're doing this is for government to be able to see, all right, that this thing works actually, So you had raised the question about, bringing these informal players into the formalized space, all right. That can happen, but it must happen with the nuance and the reality that we need to cater to them at the point of their need. So we need to meet them where they are, all right? For example, Ladi, why can't we have a tiered system, all right, that caters to the nuance of these businesses and register them on the basis of this informality? So why would I ask a mom and pop shop, for example, to bring memorandum of agreement, minutes of a last meeting or minutes of a board resolution and all of that? No, come on.
Right.
We can create a tier that appreciates these businesses for what they are, while still maintaining those regulatory guardrails, all right, but provide access to provide structured access to market, finance, and the necessary support that would help take the business to the next level.
I'm talking about some of these informal businesses. I know you guys carry a lot of transactions, and so you see behind the scenes,
absolutely,
what we don't see at this point. But are they moving away from cash more now? Cash transactions?
Yeah, well, I think the good news on that front is that about 48% have begun to embrace digital, and this is across the country. We were in Borno a few months ago, the Northeast, where we went, studying what the food patterns there was like, and I'm happy to tell you that even as far-flung as Borno is, with all of the nuances around the crisis and all of that, today that region has embraced digital hugely. And the story is the same in Onitsha. All right, where in the Onitsha market, one of the largest markets across West Africa, I mean, people who used to come to Lagos with huge wads of cash tucked in under their dresses, today they no longer have any reasons to do that because, on their mobile phone, they're able to send huge sums to, the people who they're coming to buy goods from. All right, so we're increasingly seeing a lot of these informal businesses, all right, embracing digital. But I mean, cash is still very prevalent in terms of use. Yes, cash is king for now. But we hope that as we begin to create more structures, more incentives. I think that the point needs to be made about incentivizing stakeholders, all right, to provide the services and incentivizing these mom and pops as well, to embrace digital.
Right. Have you had any experience with some of this informal business where their transactions have surprised you, where you see volume of transaction that you don't expect from an informal business?
Correct.
Maybe pulling in about ₦1 billion. Have you seen such?
All right. Again, it's
some unusual amount of money.
Well, it's to remember that a lot of these businesses transact on a daily. All right, and it is the aggregate volumes that they transact on a daily that then becomes whole. So yes, I mean, data has shown us that a lot of people who play in the informal sector, for example, 43% of them are in general trade. All right, meaning that they would carry out transactions on a daily, and that when you then cascade that to the weekly and monthly and yearly sums, it then becomes a very tidy sum.
So they're mostly trading goods.
Absolutely.
Not more services.
Well, about 34% are in services.
Services.
Yes.
So not unusual.
Well, I won't describe them. I won't describe them as unusual volumes. All right, but I mean, we have seen sheer ingenuity and resilience. I think that's the point that needs to be made. That we've seen sheer ingenuity and resilience in the informal economy. All right, day in, day out, where they brave the odds and they push these volumes to ensure that they're able to feed their family, they're able to provide for those around them, and they're able to contribute, to the larger economy, because all of this trickle down and ensure that, Nigeria's economic ambitions become realized.
Right, and you wonder, once you have such a huge informal, sector or economy, it almost feels like because we have that hustle nature, at this point, that's why everyone's, starting off an informal business.
Well, I think that the point there is, we have challenges with employment. All right, so 3 out of 4 in the informal space has come into that space because he wasn't able to, get some solid employment. All right, and paradoxically, the informal sector hires over 40%, of Nigeria's workforce today as we speak. All right, so people have come into that space because
because you couldn't find a job.
Absolutely.
You get in there.
Absolutely.
Then you're now employing people.
Absolutely.
Huh.
That's what we've seen. All right. So unemployment is a challenge that has pushed a lot of people into informality. All right. But we have seen due to the grind. All right. The resilient spirit. I mean, Ladi, even people who work, who got 9 to 5, chances are that 1 in every 2 has a side hustle that is generating extra income for them.
Right. Quite interesting. I'd like to see that report at this point. But, what can we do with this data, at this point? That's looking at it from, the policy side of things and, generally looking at the Nigerian economy. What do we do with this data?
All right. For one, for good people like you in the media, I think that it provides you with the opportunity to see real life stories. All right, and I'm sure that you check out the website as the days go by. Interestingly, I should mention, for example, that today and this is the first of its kind, we've got an AI chatbot that is dedicated to the informal economy. All right. An AI chatbot that helps you converse. All right. So if you're looking for a better understanding of these reports and other areas of the informal economy, once you just hit the website informaleconomy.moneypoint.com, it provides you with all the information that you need to make critical judgments, to tell better stories as a journalist, for data and policy, for investors as well, people who want to invest in this space. You've got a groundswell of data to work with to make informed judgments and advise the companies that are under your portfolio to say, look, we've seen this pattern over the last 2-3 years. We think that the company is best served by doing ABC or 1, 2, 3 based on the intelligence that you can gather from this report. For government, I mean, I think it's a huge data source that would provide evidence-based policy making. All right, I think that's the point that needs to be made. That look, this report provides, the impetus, all right, for government to become a lot more evidential in policy
Right.
decision.
I know we have that whole tax reform coming up.
Yeah.
Next year,
Correct.
and a lot of these informal businesses would feel, the impacts of what's coming up.
Correct.
2026.
So while I understand that there's some apprehension, understandably, all right, I think that the point also needs to be made that a lot of these informal businesses are not scared because they pay levies on a daily. Absolutely. The report shows that they pay levies on a daily, So it's something that they're very well aware of, all right? I mean, in every market store, there are people who go around collecting money for, this and that. So it's something they're well used to, but we must show them, all right, the incentive behind it. We must give them a reason to want to do it. I mean, a lot of times we're very punitive, but I think that we want to advocate for a lot more incentive-based compliance frameworks, or like that allows people, that incentivizes everyone to do the right thing. I think that once you incentivize people to do the right thing, without cost, they'll do it.
To pay those taxes.
Absolutely.
Definitely. Thank you so much, Bemiwa Awala, as the head media and public relations at MoneyPoint. It was good having this conversation with you. And I'll dig in more to that report.
Thank you very much.
Let's see what the informal economy really looks like right here in Nigeria. Well, we'll take a break now. When we come back, more conversations right here on Business Morning. Just stay with us. Welcome back. Well, digital identity is rapidly emerging as the bedrock of Africa's burgeoning digital economy, particularly for its dynamic financial sector in a continent characterized by vast, market diversity, complex regulatory landscape, and an ongoing drive towards financial inclusion. A robust and trustworthy digital identity system is not just a convenience; it's an absolute necessity, for growth and security. Well, join us to unpack this now. We have Ibifuro Apiafi Holiday. She's the head of account management at Smile ID. Joining me right here. I got a tongue twister there. Great to have you. Good morning.
Hi, it's good to be here. Thanks for having me.
Fantastic. So I guess in this digital world, having an identity and an identity that can be, easily, accessed, people they know who you are. If you're going to play in the financial system, people need to know you. You have know your customer and all of that. So talk to me about what you're seeing, so far when it comes to, digital identity in a continent like Africa and what we're seeing in Nigeria so far.
Yeah, I mean, when you look at digital identity across the African continent, we're starting to see that biometrics has become very, very mainstream. We've gone past the days where people were okay to just onboard people by using the identity number only. We're starting to see that most of our partners are now insisting, happily for us, insisting that the users also provide a level of biometrics as part of the authentication process so that we can be sure that the person that has presented that ID number or that ID document is the real owner of the identity, really. Additionally, what we're seeing is multi-layered identity verification. So beyond just using the ID number, we're starting to see a trend where people are also making sure that the phone number that's been provided is actually, again, belongs to the individual. We're seeing AML checks because, considering individuals want to be certain that they're not onboarding bad actors into their financial ecosystem. It's super important that financial services organizations, as well as e-commerce and some other sectors, are starting to make sure that they're going a level further in terms of verification and knowing the people that they let into their ecosystem.
Is it getting easier or harder to identify people?
It depends on the market. I think that it is definitely getting a lot easier in the sense that, at least at Smile ID, we've done a lot of work in terms of building the railways for financial services and other sectors to layer on and build across multiple markets. So we've built our products in such a way that if a partner wants to scale into multiple markets, it's pretty easy. As long as you're using our products, it's as simple as switching on or switching off ID types, right? So in that regard, it's getting a bit easier. On the other hand, we're still seeing a situation in some markets where there's no identity database that exists, like we have in Nigeria, for instance, or in South Africa, or in Kenya. So there's still a need to rely on documents in those markets, which is fine for us. We're able to do that, but sometimes there's some nuance to doing those document authentication requests. But yeah, so it's a mix.
Like, looking at a country like Nigeria, we have NIN, we have BVN, and some would say we have a lot of identification, when it comes to a country like Nigeria, but it still seems there's still that gap.
So
right there, especially with financial services.
I would say that regulation by CBN has made it pretty clear what is required, especially for financial services institutions. So it's pretty clear that when you're onboarding a user for the first level, you're supposed to either take BVN or the NIN. Second level, you take the other. So if you take BVN in the first level, you need to make sure you've taken the NIN at the second level. So it's pretty prescriptive from a CBN regulatory perspective, and it's out there. And they've also insisted that now you also layer on biometrics into that process flow, again, in terms of increasing security and assuredness for the organizations to know that they're onboarding the right people. So I do think it's getting easier. I think it's a bit less complicated now that CBN has explicitly stated that this is how you go ahead and onboard these users. It's very prescriptive, and as long as organizations are following the steps and doing the right things, they should be fine.
So how does it help? We keep talking about the underserved, segment, of the society. We've heard about traditional banks not able to reach some of these people, but fintechs are able to somehow get there, with super agents and all of that. So how is digital identity How's that helping, to bridge that gap, especially for underserved areas?
So when you look at the underserved, we find that especially in Nigeria, you see that there's a lot of reliance on agents, like you mentioned.
Right.
And it's not just Nigeria, actually. We see that in South Africa and some other markets as well. Those agents are essentially your one-stop shop for financial services provision at this point in time. Gone are the days when individuals had to literally go into a bank branch and speak to someone to get service. Now with these agents, you're able to do that at your convenience in a local that's close to you. We're then able to, so beyond identity at the point of onboarding, we're now able to also do transaction authentication leveraging biometrics. So we're certain that person A opened this account, and this same person is the one that's come to do a transaction even at this agent location. So we're not just relying 100% on agents to handle these things. There's a level of authentication that is being done to make sure that the individual that's presenting is the real owner, and that's giving a lot of access to people that typically would need to travel long journeys to prove that they're the real owner of the account to then request for a transaction. You're able to do that remotely with these agent networks today.
Right. Yeah. So what are you seeing? We keep talking about, financial inclusion, at this point. I'm looking at continent. What are you seeing, going further, at this point, say next 5-10 years? Do you see more people included, and how is, digital identity going to help all of this?
100% see a lot more people being included, and again, it's the point around agency. I think there's a lot more reliance on the agency networks to get these financial services, let's say, distributed across even remote areas. And for us at Smile ID, we recently got into a partnership with MasterCard. We look at the partnership in the sense that we've built the digital identity rails, they've built the payment rails. We're seeing a trend of authentication and leveraging biometrics to confirm identity, going beyond just onboarding to sort of more payments and securing payments. So that partnership works very well for us, and we believe that it will help drive the inclusion because, again, as long as people have the freedom from wherever they are with the device, their agent's device, to be able to prove their identity, it's easy for them to get into the digital ecosystem or the digital economy, and they can access services even beyond financial services. We're talking e-commerce, we're talking, ride-hailing, etc.
It should even get into markets, at this point, because everyone needs identity, even for shareholders. Yeah. We need to know who the shareholder is
100%.
Of a particular, company. So, looking at, Africa, the continent here, which countries would you say are leading when it comes to, digital identity?
When it comes to digital identity, it's definitely Nigeria, South Africa, Kenya, that are the leaders. We see some other markets that they're doing the work. I think there's a lot of work to be done, and I do believe that a lot of the government agencies really realize that there's a lot of work to be done. There are forums where they meet and try to learn from each other and ensure that they're developing as quickly as, South Africa, Nigeria, Kenya, because identity is the key to unlocking.
I'm sure it cuts across politics too, voting.
There's an element.
There's an element in there.
There's of course an element.
We need to know who's voting at this point.
Yeah.
Well, it was great unpacking this with you. Ibifuro Apiafi Holiday, Head of Account Management at Smile ID. Thank you so much for coming on today.
Thanks for having me.
All right, let's find out what's hot now right there in the global economy. We have John McWatt with the details. Hello, Ini. Great to have you. I see you're green. Might mean something.
Yeah, it means the land is green.
Right.
Nigeria is green.
Yeah.
Yeah.
Land
So there's
green.
prospect for growth.
Fantastic.
That's what it means.
Yeah, and green colors in the market too.
Yes, yes. All right, good morning, everyone. Welcome to Global News. We tell you what's going on outside the African continent, and we start from the United Kingdom this morning. That's worrying news. The UK's borrowing has gone beyond the forecast by £7.2 billion, more than what it was expected in the first 6 months of the fiscal year, highlighting the challenge facing Chancellor of the Exchequer, Rachel Reeves, to get the public finances back on track in our upcoming budget. The budget deficit climbed to £99.8 billion, overshooting the £92.6 billion forecast by the Office for Budget Responsibility in March. Borrowing in September alone was £20.2 billion. That's the highest for the month since the pandemic, with the deterioration driven by a sharp increase in debt interest costs. So it's not just in Africa or in Nigeria. The developed world is also feeling it. And still in the UK, construction of offices, retail facilities and warehouses in the United Kingdom plunged to the lowest level in 11 years as rising costs and protracted political uncertainty since Brexit has discouraged developers from putting their shovels underground. No commercial asset class has been spared, with construction across office, retail and industrial sectors down 21% to 63 million square feet at the end of the third quarter from the same period a year earlier. This is according to data from Costa Group Incorporated. And still in the UK, Chancellor of the Exchequer, Rachel Reeves, will announce the government is cutting red tape for businesses in an attempt to boost economic growth as she prepares for a difficult budget next month. Obviously difficult. At the Regional Investment Summit, Reeves will hold out the prospect of £6 billion of annual savings for the firms, with simpler corporate reporting rules of 100,000 qualifying businesses. This is according to a statement released by the Treasury. And the inaugural meeting will also unveil £10 billion of private sector investment. And connected to that, Unilever PLC pushed back its demerger of the Magnum ice cream company due to the government shutdown in the United States, though it expects to complete the spin-off this year. The U.S. Securities and Exchange Commission is unable to declare effective the U.S. registration statement required for the ice cream company's shares to be admitted to the New York Stock Exchange. The Anglo-Dutch Consumer Goods Company had to share this with members of the public. And Switzerland's export to the U.S. rebounded in September, suggesting that demand for its goods is so far withstanding the impact of President Donald Trump's outsized tariffs. For foreign sales to America, excluding gold adjusted for seasonal swings, were 43% higher in September than what it was in August. According to the country's customs office, the total of Swiss shipments rose by 3.4% for the period. Still in Swiss, the Swiss franc is closing in on a decade high against the euro as heavy demand ripples through markets due to renewed tariff and political concerns. The currency touched 0.92 per euro, leaving it now at about 0.2% shy of levels last seen in January 2015. And then Indian's Reliance Industries Limited bought Middle Eastern crudes last week and may place more orders from that direction. It's a sign that Western pressure against the Russian flows may be starting to impact the procurement pattern. The privately held refiner bought at least 2.5 million barrels, including Iraq's Basra Medium, as well as Al Shaheen and Qatar Land. Traders have shared this information. They're asking that they are not authorized to speak, but we see India yielding to that threat from President Trump and going the way of the Middle East to being more active than usual in buying crude from that area. And talking about that, Saudi Aramco's Tanura oil refinery current accounts will benefit most from that rebound in oil prices and production, according to International Monetary Fund. And this despite the government's progress in diversifying the 1.2 million trillion economy. An increase in oil price, a recovery in oil production has had an immediate effect in that. The Fund's Director for the Middle East shared this information, Fund's Director for Middle East, North Africa and Central Asia. They shared this after the meetings in Washington, D.C.
All right, thank you so much, Inide, for giving us details of what's playing out in the global economy. And I have access right there into what's playing out in the market right now. Trading is going on, and I can tell you for a fact, we have broken the 150,000 level. Looking at investing.com, trading at 151,405. See the most active traded stocks: Guaranteed Trust Holding, Dow Communications, Universal Insurance PLC, Fidelity Bank, Secure Electronic Tech there. So there you have it. We'll see if this continues into the intraday trade. That's on Business Incorporated. We'll bring you more updates there. Thank you so much for watching Business Morning today. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.